We detected an unusual trade worth $15.2 million on Palantir stock, ticker symbol PLTR. But here's what makes it more interesting. Palantir stock has dropped about 40% from its high in just a few weeks. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying this opportunity or bearish and selling into this crash. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better financial decisions. This is why smart money always stays one step ahead before the rest of the market catches on. No wonder the rich keep getting richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on March 11th at 1:36 at the 57-second mark, for these March 21 options at the 105 strike calls, and these May 16 options at the 80 strike calls. Now, we need to be very careful with these 15,287 contracts being traded for the March 21 options, because when we dive deeper into the data on the option chain, we can see here for the March 21 options at the 105 strike calls, we have an open interest of 22,785 contracts, which is more than the 15,287 contracts being traded. And so, based on our analysis, this wealthy investor was closing these options, but also opening a new options trade. And so, if we go back to the options time and sales tape, this wealthy investor was closing out these March 21 options and rolling them to a lower strike price and a further date out. This means that these May 16 options at the 80 strike calls are the new open trades. And so we can calculate the total cost of this new trade, the price of 10.00. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade cost $1,000. And since there was a quantity of 15,287 contracts, we multiply that out and we get a total of $15.2 million for this trade. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here on the options chain for the May 16 options at the 80 strike calls, since this was a new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position. Now, how did we know these were new opening trades? Well, notice that these options have an open interest of 4,471 contracts, which is much less than the 15,000 contracts being traded. It would not be possible to close out 15,000 contracts if there were only 4,000 open contracts. And so we can conclude that this wealthy investor was opening new contracts and not closing out contracts. This data is very important to figure out because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, it could signal an opportunity for us to start a new trade. And so we always take this extra step to analyze the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. Now, with that being said, not every trade will be a winner, but as long as we diversify our portfolio with high quality stock picks backed by strong data analysis and use option strategies that can gain more than what we could lose, then we can stay consistently profitable over the long run. And so, if you want more trades to diversify your portfolio, go to our website. We'll put a link up here where you can get access to more opportunities and strategies to increase your profit potential. Now, back to this trade, let's break down the data even further. Based on our deep research and analysis of multiple variables and data sets, this wealthy investor bought these 80 strike calls for $10.00 each, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive profitable because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay, which means that as time goes on, this trade will lose in value. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though these call options have a strike price of $80, the stock needs to trade above $90 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more trading strategies to boost your profits and gain an extra edge beyond just picking the best stocks to beat the market. Let us know in the comments below. Do you think it's time to buy Palantir stock? Or do you think it will continue to crash down lower? As usual, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.